Okay, so you saw that Intel dropped more than 30% from its high earlier in the year, and that it is trading at a very low valuation. And now you are debating whether to buy the stock either as a long-term investment or as a short-term mean reversion bet. Before you invest, there is a couple things you really need to know. First of all, Intel's bread and butter, as you know, are its CPUs, basically the brain computer, if you like. Intel is the world's largest chip manufacturer on the basis of revenue alone. You see that the growth has been in double digits and has been quite substantial for the past couple of years, but it did hit a rough patch as of late due to a lot of reasons, and AMD is a part of that. The company has two main segments: a PC-centric business, which they refer to as CCG, the Client Computing Group, which is basically everything that has to do with PCs and CPUs for the PC market, and a second segment called the Data Center segment, which they refer to as DCG, the Data Center Group. The PC segment represents roughly 54% of their sales, and the data-centric business line represents the rest, with sales coming mainly from CPUs and GPU chips used in the cloud and data servers. So as you can see, the data center business line is pretty stable and is expected to be pretty stable in the future as well, albeit with slower growth rates. This is mainly due to the fact that the end customers in the data center and server businesses are more sticky. Think of Amazon. They are not going to switch their CPU vendors from Intel to AMD on a whim, but they have to be sure that the technology and the process technology from AMD is legit. The client computing group, on the other hand, and the end customer in that business segment is a bit more volatile. Say you want to build a computer, a gaming computer or a gaming setup, you are not going to go for Intel if you think you're going to get a better product from AMD with a better performance at a cheaper price. And this is what you see in the graph, and this is what the market is expecting: a loss in market share from Intel in favor of AMD. The thing about Intel is that it is a mature company. There is no high growth, not the like of growth you can see in AMD's financials or Nvidia's financials or other growth companies, but it's in a lot of ways a value play. You don't have a stellar growth, but on the other hand, you have a decent valuation, and you get it at 10 times or 15 times price to earnings. You can see that the margins of Intel are higher and way higher than AMD's, and that is because the process is streamlined and the process technology and the manufacturing capabilities are in-house, where AMD outsources them to TSMC, a Taiwanese company. And in terms of market sizes, you can see that Intel's shipments of CPUs for the desktop segment line is above 80%, and for the server business line is almost 100%. But you can see that AMD is creeping up a little bit and gaining market share from Intel just because of that better technology. And that is because they are outsourcing everything to TSMC, which has a better process technology than Intel. The way to explain it is that TSMC are already in 5 nanometer technology, so they are making chips that are smaller with the better precision, and they can fit more transistors into each die or wafer, whereas Intel, which manufactures its own CPUs and its own processors, is in the 10 nanometer technology, and they are pushing to get to the 7 nanometer technology, and that means that they are not able to offer as high of a performance as AMD's, and the price can't not be dropped to match that of AMD. And this is what explains the market share gains that AMD is continually having over Intel. Let us discuss now why it might be a good idea to invest in Intel at the current prices and at the current valuation, which is relatively low. First of all, Intel is a legacy player. It has very strong brand name and very strong brand recognition. So Amazon, Google, they will invest in Intel just because of that cachet and because of that brand name. Second, Intel has a very large installed user base already, both for its data centers and for its client computing business. And that makes it harder for its competitors, specifically AMD, to get higher market shares. Think of a PC manufacturer that has already Intel and the Intel ecosystem embedded in its manufacturing capabilities. It would be harder for them to switch to AMD, even if AMD has 2, 3, 4, 5 years of technological advancements over Intel. And lastly, it is good to keep in mind that Intel enjoys better margins due to in-house manufacturing capabilities, and the fact that they manufacture everything in-house enables them to have higher cash flow generating capabilities. They are basically a cash cow even with lower or stable growth, and because of that they can do a lot of financial engineering, and they have a higher degree of capital deployment capabilities that AMD does not have. They basically can buy back more stock, they can issue more dividends without having to dent their balance sheet with a lot of debt or issuing equity, etc. For the negative side of things, and for reasons why not invest in Intel and why you might be bearish on its outlook, is as we discussed before, the lackluster technological advancement. The fact that they are still in 10 nanometer process technology, and they are delaying their 7 nanometer and 5 nanometer roadmap. This is very substantial and very critical because of the competition from AMD and specifically from TSMC and other foundries who are already going for that 5 nanometer. Another negative is the fact that some big end customers in the PC segment are already switching to AMD or to other in-house chips. For example, Apple with their M1 chip. They are trying and they are going for a lineup of Macs and MacBook Airs and MacBook Pros with an in-house M1 chip and non-Intel processor, and that is very substantial. Another problem they are facing is that the fact that they need higher capex spend due to the in-house manufacturing. They need to spend more in terms of capital expenditures, in terms of R&D, research and development, to keep up with the advancements or to improve their processes and catch up to TSMC and GlobalFoundries and Samsung, etc. Another problem that they might be facing is that if they decide to switch to TSMC instead of manufacturing in-house their processors and their chips, it will dent their margins. So as you saw before, the margins were way higher than AMD's because they were manufacturing in-house. If they do switch, the margins will go down and the revenues will go down as well. It would not be as profitable to them. And it is also good to know that the business for processors for CPUs is pretty cyclical, both for the data center and for the PC segment and the CCG business segment. It is cyclical. We are now in growth phase because of coronavirus, because a lot of people are buying computers and expanding their data centers. But this is not likely to be like that in the long term. So there is a cyclicality to an Intel investment, and you can see slower growth going forward, both from attacks from AMD, from Apple, from other end customers, and also the cyclicality of the business. So with lower revenue, you're basically getting a lower price. So should you invest, should you not? As a conclusion, I would say it is pretty risky. It is a cheap investment, and if you are willing to hold it for the long term, you have to bet on Intel turning the ship around and making progress towards a better node process technology. If they are not able to achieve and deliver on that promise, long term, Intel will lose market share to AMD and to other competitors, and it will be hard for them, frankly. Should you short it? Should you buy puts on Intel? I would caution against it as well, to be honest with you. As I discussed before, Intel is a cash cow. They have very high margins, they have a lot of cash in their balance sheet, and they have the capability and the capacity to invest heavily in their R&D and in their capex. They can, announce in a year or two that they are switching to outsourced manufacturing with TSMC, and if they do that, it would be, it would be hard. To be short. I did run a discounted cash flow analysis on the name just to get a feel of the where the free cash flow they are generating can be and what's a true valuation of the company, and I get around 240 billion, give or take, in terms of market capitalization, and currently Intel is trading at 195 billion. So we can see that, from an upside perspective, you can expect something around 20%. Is the risk worth it? I would say maybe. If you are willing to get 20%, 25% on a blue chip name, where there's upside and significant risk and downside, I would say go for it. Otherwise, you can wait next week, where I'll be discussing AMD, the investment thesis in AMD, and whether it is a better buy than Intel, and if the current prices and current valuation of AMD warrants an investment. So stay tuned.